Welcome back to the channel, Crypto Trend Trader, with an update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Actually going to be taking a look at crypto, traditional markets, Treasury, 10-year bond yield, and also the Dxy Dollar Index, gold, silver. Just going to hit everything. Sorry about the video earlier. Attempted to re-upload it, thought it was some sort of uploading issue with the sound, but turns out that it was actually like the recording, some kind of mic hardware issue. So it's very unfortunate because essentially what I was saying in the video and top concerns and everything are exactly what is playing out right now. So I'm sure, as everyone knows by now, Elon Musk has decided to add Bitcoin to his Twitter profile, and then tweeted a few hours later essentially that it was inevitable. I'm going to start off real quick before I get into all of it. I want to talk about Chamath and the GameStop pump, Elon, and now this Bitcoin pump, and basically the one who started all this earlier in the year, Dave Portnoy, and his stock pumps. All these guys are essentially huge targets and putting huge targets on their head. They're all extremely rich, extremely well known, have massive followings, and they're all guilty of market manipulation. It's one thing to be a CNBC talking head or whatever and get on and talk about, fundamentals or technicals or whatever and say these stocks are good, that stock's good. But, to get on basically with millions of followers like what our boy Portnoy was doing earlier in the year, and, basically like pump and dumping stocks. You don't have to say, hey, I'm pump and dumping stocks. But when you get on there and say, hey, let's pump this stock up together, let's all buy this stock together, let's run it up, that's a pump and dump. And that is illegal, and the SEC will come after you. And just because you're rich and you can buy your way out of it, or you can afford to pay fines or whatever, that has horrible effects on the people, not only that buy in after you, that get stuck holding a bag or don't realize what's going on, but also the companies. Because what happens is these things pump up massively and then they dump down even lower, and then it creates a negative sentiment for that company or for that stock, or makes it so that, people won't reinvest in them or don't have an interest in them in the future. And it has literally irreparable damage it causes to these assets. A lot of times it will break through key support, the same way, just as fast as it breaks through key resistance on the way up or whatever. When you start pulling stocks out with Scrabble and tickers or whatever and just start running them up or whatever, people FOMO into all these things, hoping to make a quick dollar. It's basically it's a full-on pump and dump scheme. It's illegal as hell. And, just because hedge funds are doing it, I'm not saying that they should be able to do it, but, the SEC theoretically goes after them. And, when you have a big following and you're doing the same thing and you're intentional and you're clear about it, they're coming after you too. And they might take their sweet-ass time. It might be, 6 months or a year or 3 years or 5 years, but don't think for 1 minute they're not coming for your ass, and eventually you will get charged and you will settle with the SEC and you will pay them massive fines. But, the damage is done. You're basically a millionaire or billionaire or whatever, and you're screwing over good people because somebody buys the tops on those things. It's not always massive hedge funds that are closing short positions like what happened with GameStop, which, again, I think that's great that the people band together and do that stuff, but it's illegal as hell, and there's a reason it's illegal as hell. Is because it causes damage to markets, permanent damage to markets and to real companies. Because the truth is, all right, Warren Buffett specifically says, one of his famous quotes is, in the short term, stock prices are a betting machine. Basically, it's like a popularity thing. People will bet on something because it's popular, it has a big name, whatever. But in the long term, stocks are a weighing machine. And what he's saying is they, eventually they weigh the value out of that actual thing. So, that's not the exact quote, but essentially what he's saying is, in the short term, something can be popular and it can go up. But in the long term, in order to maintain that value and to maintain any value, eventually the markets will become efficient and source out the actual value versus the price. Because price can pump up quickly, but value is what maintains something over time. And that's a perfect example of this. Exactly what Chamath did. He comes out and says, hey, what stock do you guys want to run up next, basically? say something and, I'll pump a bunch of money into it. And what's he do? He pumps, I think it was like 100,000 or 500,000. It was something ridiculous. He pumped into GameStop, runs it up, and then sells off his position and then goes on, key networks and says, oh yeah, I bought into that. I participated in it, but I sold out my thing and now I'm going to donate the money to charity. Well, what about you? That's great that you're donating money to charity, but one, he's getting tax write-offs. Two, who knows how much he actually made off those positions, which he's rich. He doesn't need the money anyway. But three, how much irreparable damage, one, does it cause to that company permanently? And two, how many people FOMO in, end up buying the top, and end up losing thousands of dollars that they shouldn't have been having? And you could blame it on the people and say they're stupid, they shouldn't have FOMO'd in or whatever, but when you see that happening, that's what FOMO is. It's a real emotion and people can't control it, and then they end up losing their house, their car, their wife, their mind, whatever. It's absolutely terrible. And it's the same thing Elon did. We're at basically a key level in the market, and then he comes out and puts something like that, and bam, look what happens. Massive pump up, unsustainable, comes straight back down. And what's it going to end up doing? More likely than not, it may have broken out of this pattern. Essentially, it may have broken out of this triangle right here, but all it really did, we have a high, we have a low, we have a lower high, and then we have a lower low, and now we have another lower high. So all he did now was create basically what I call a throw over. You move the price all the way up to a key resistance, you throw the ball up as high as you can, or you pull back on the bow and arrow, you pull the string back as far as you can, launch the arrow up in the air as high as you can, and then when it comes back down, it has so much more velocity, because instead of dumping from here and trying to break through a support, now it's pushed all the way up to the top. All these people, anybody that basically bought above this point right here, if you bought anywhere up here now, you're upside down in a position. So we're right back where we started. All this action on the way up, and then all this action on the way down is going to create extra action to the downside now and potentially break through this key support. Not only that, but it negates a lot of like technicals in the charts. It messes up moving averages. It messes up like indicator oscillators. It causes a bunch of basically damage in this. Not to mention that, a lot of the people that got out of Bitcoin, and the problem it took us so long to get the price up so high, bought in at irrational levels, and then basically got stuck in these assets for like years, sold at a massive loss, and now have no interest in Bitcoin because they think it's a pump and dump scam. So that's the same thing that happens right here when Elon says Bitcoin and it pumps up like this, and then they get wrecked and lose their money, and then all of a sudden this thing drops down to like 20,000 or whatever. They're going to say, oh, that's a pump and dump scheme. So why don't you worry about like, pumping up Tesla and talking about that, and worry about why it's dumping right now, instead of like trying to attack other assets. And, these guys think they're like some kind of hero or some kind of Robin Hood, and they're not. They're causing irreparable damage. There's a reason this stuff is illegal, and I completely agree. Hedge funds should get wrecked, this, that, and the other. But the purpose of shorting is there's two main reasons people short. One, to hedge positions, and two, a lot of times shorts are what recognizes that there's a problem in a market. Like short positions, people that short have unlimited risk and very little to gain, because they can only ever gain like 99% on the way down. But a stock can easily double, triple, quadruple, 100x even. So they have infinitely more to lose than they have to gain. And, I'm not saying that it's right that there was more shares, shorted than a company could have over 100%. I think that's total BS, and that's something SEC should definitely look into. But these people that short, these guys put in the work a lot of times and literally go out there and find people that are lying on their balance sheets, people that are underreporting, overreporting, fibbing numbers, fudging stuff. Like some of the biggest scandals, scams, lawbreakers, like financial institutions, some of the shadiest things that have ever happened were exposed by people shorting and putting in the work, because what they do is they go find something that's wrong, they research it, and then they make it public for people to see and say, hey, there's something wrong with this guy's books, and that's when the short positions pay off. So they often put in more work than anyone else does. And, that's why they're so important. And now all of a sudden you have people that are like notorious for putting in the work and for shorting and everything. And again, I'm not talking about the GameStop example specifically, but you have these people now thinking like, I have to rethink everything now. Is it really worth it? Because I have unlimited risk, and all it takes is just somebody on Twitter, somebody on, forum or Reddit or whatever. That's not right. And that's going to cause horrible damage to the markets. And this is exactly like 1920s, 1930s, like, stock market, like pump and crash is like, it was irrational pumps, like FOMO in, like, all this money starts concentrating into like smaller and smaller amounts of assets, pumping up, and then it's unsustainable and sells off. And then it's like it starts off as 100 things pump one sector, and then it's 25 things, and then it's 30 things, and then it's 5 things, and then it's 2 things, and then it's 1 thing, and then the whole thing crashes down. And essentially what causes tops in these markets is, when people start getting scared, start getting worried, start realizing like it's a bubble. And, it's been a bubble for months. It's all because of all this money they're printing. It's all because of all this crazy speculation. I totally agree. And again, I'm not arguing against that stuff. But the truth is this is what pops bubbles. These crazy last like run-ups like this, these crazy bursts to the upside, these crazy like, irrational moves. And, it's terrible for these assets now. And oftentimes they pay the price for extended periods of time. The same way that like the Fed creating all this extra cash, and pumping it into the system and doing all this like extra QE, not QE, like BS. All that stuff causes extra long bear markets, extra long recessions, extra long depressions. When in all reality, if you just let the free market decide, you might have a recession, you might have a pullback, but it's not going to be as bad or as severe. People aren't going to suffer as bad, and who knows what's going to happen. You wreck the right people or whatever, and somebody comes after you, and, maybe they don't have anything to lose. But if you're Chamath or you're Elon or, you're Dave Portnoy, like I guarantee you got a lot more to lose than most people do right now. So, it's very unfortunate to do stuff like this, and it's 100% illegal. And I hope the SEC does go after them, But anyway, that's my little rant about it. Sorry about the video earlier and the sound being all messed up. It really sucks because I basically just called out exactly what's happening here. What I was saying was, if we don't, we're going to start with Bitcoin, Bitstamp chart, 4 hour. Again, this is not financial advice. I'm not your financial advisor. Let me know what you think of this stuff. These markets are extremely volatile. Please do your own research, trade responsibly. Essentially, we were looking at these key lines. This, basically like descending resistance right here. 1 touch, 2 touch, 3 touches, and then we broke through this one, came back, broke back through it to the downside, sort of found support on it, and then that's when Elon decided to make his move right there. So it causes this massive, move back up here, this massive squeeze, this massive candle that's completely unsustainable. Breaks through not only this key resistance, and starts to get the measure move of this move, but then breaks through the top resistance as well. It started to close back below it and looked like it was going to get rejected, but ends up moving back to the top. I'm sure people were still FOMOing in, thinking this is a breakout, it's confirmed, whatever. Potential move to the upside I spoke about in the video. If this was sustainable, measure moves were basically like, 45,600, potentially up to like the 1.5, 50,000. There was a lot of potential to the upside, but what we were paying attention to is, are we going to break above this, sustain it, and then get continuation to the downside, continuation to the upside, like what happened right here, basically, when he put out that tweet? Or are we going to break back inside and then fail to hold it, and then essentially come back down and retest the bottom of the range, which is what's probably most likely going to happen now, because this is a massive rejection. This is an absolutely horrible rejection. It would be much better if we got this sell-off here, and then maybe even another one, put in another higher low, continue up, get the break, come to the top of the range, sell back off, and we build basically a foundation that we can move off of. But instead, we get this massive pump and dump, and now, people are going to be skeptical. People have lost. It's going to create momentum to the downside. Even though right now we're still technically above where the pump started at, you know, in time, typically what happens is you get one massive candle up and then a bunch of down ones. It's same as here, you know, you get one massive candle up and then a bunch takes to get back lower, but you get a higher low and then you build up slowly. You know, that's most likely not what's going to happen now. We're most likely going to sell back off to the bottom of the range, you know, potentially stay inside of it, but I think it's more likely than not that we're going to break at this point in time. You know, as a ton of money floods into these markets and people start realizing it's going to sell right back off, you know, they end up just taking profits and it ends up dumping down lower than when it started. And like I said, you know, it broke through the top with a bullish FOMO move. You know, it's just as likely to now break through the bottom as people now like don't trust these markets, don't trust their positions, don't feel safe. You know, it sucks, but it is what it is. So there you have basically, like, you know, I set up in the other video. I'll just go back through a couple of things I was showing in the video. You know, it's still relevant. It sucks, obviously, because, you know, didn't have sound, and that was key time to basically, like, have a video out and available. But what I was looking at was essentially from our top to bottom right here, top right here at 42,000 down to the bottom wick down here at like 28,800 roughly. When we sold off to, you know, we pumped all the way back up to the 786, got rejected at the 786, and then sold back down. So is it possible we find support on one of these other key fibs? Yeah, we could find support on like the 382 at 33,000 and then move back up. But again, it's not sustainable, this type of move, and I don't think it's like. Next, what I was showing off here is from this top right here, basically. From this little tip that we got up to when we got rejected last time at that resistance at like 35,000 to the bottom that we just came down to right here where it was like 29,000. You know, the measure move essentially on that one, you know, you look at, it's over the 100%. It's over where it started at. So you start looking at Fib extensions. So the first one was the 236, which was to the top of the range, which we would potentially top out at and then come back down. But instead we broke through that, broke through the 1.382, broke through the 1.5, and actually almost touched the 1.618. So again, you know, Fibonacci extension took us up to the 1.5, which is a common like Fib extension. So it's essentially this move right here plus another 50%. So it's all the way back up 100%. So it moves down, it moves back up 100%. So it's like a same top, and then it moves up another 50%. You know, and then tops out, obviously comes back down, and then you can start looking at like, you know, bearish retraces. But that's what I was paying attention to right now. And then I was specifically talking about how this is like unsustainable, this type of price action coming in like that. You know, especially when there's no reason for it. There's nothing changes fundamentally. You know, it's literally just complete speculation, complete FOMO. You know, it's basically people saying, oh my God, Elon's in, I'm going to rush in. It doesn't mean Elon's like not going to tweet that out right before he buys and then he's going to buy on this candle too. If he bought, he's going to do what Michael Saylor did. He's going to wait and then tell everybody afterwards and then go on every single program possible and start like advertising for his investment to pump it up. People don't tell you, hey, I'm about to buy, and give you a chance to buy before them, because it drives up the price, especially if they're going to buy like a substantial amount. What they do is they suppress the price for a long time, and then they buy, and then finally once they've bought enough, they do like Michael Saylor did, and they come out and tell everybody, and then they remove their sell walls and then pump up price. So, you know, you got to be very careful in these situations when you see something like that. You know, it did look like a potential legitimate, you know, break. It looked like a break, retest, and confirmation, but it didn't really hold the actual support. It actually was like a failed breakout. I don't know why he decided right then to tweet that out. I'm assuming that Elon Musk he's obviously very smart, but I'm assuming he does not do technical analysis. So it seems like a strange time to do it. But it was like probably, depending on how you look at it, the best or worst time to do it. It was the best time if, you know, you just had a failed breakout and you FOMO'd into the top, but it was the worst time to do it, you know, to basically like take a dump on actual people, actual investors, actual like speculators, whatever. And again, I get it. He's probably salty because people have been shorting Tesla this whole way up and not believing his project. But let's be real, Tesla wouldn't be where it's at today if it wasn't for nonstop short covering. You know, because people have been shorting Tesla the whole way up, saying, you know, they're not making enough cars, they're not generating enough money, they're barely a profitable company, you know, all this different stuff. Their market share is nothing, but their valuation is all the other top car companies combined, you know, all these different things. have basically caused people to speculate against Tesla and short Tesla the whole way up, and that's why he's literally the richest man like alive, or at least reportedly, became a billionaire. And yet here he is, like salty that people are shorting and trying to like, take out shorters. Doesn't make sense to me. I think he's a scumbag. I don't think he realizes what, this could essentially result in what would have been a legitimate correction turning into like a full-on multi-year bear market, or even killing potential assets as people like, if this breaks down here, goes back down, and then all of a sudden people say, oh, it's just another pump and dump. Maybe the SEC gets involved, regulates this, changes laws. Who knows? But you don't need bad attention like this drawn to an entire asset class, let alone something that's like pure and not corruptible by man. Doesn't really need people jumping in and basically shitting on it. So what if Chamath now decides he's going to go ahead and dump his up to 1 million Bitcoin that he has, dump this thing back down to zero? Maybe he's colluding with Elon. Maybe they just randomly decide they're going to both get involved in this stuff. But things like all these like SPACs and all these like little tweet storms and all these quote unquote short squeezes or whatever, you're not doing anybody any favors. You're basically like, you're messing up these markets, and taking away the, the organic nature of them. Especially something like Bitcoin. I could give a damn about traditional markets. They're manipulated left and right. Bitcoin's obviously manipulated left and right, but it doesn't give anybody the excuse to step in and cause extra damage to it. So you see where I'm at right here. If we break this triangle now, we're right back where we started. We broke back down below that key support line right here that we were unable to get above right here, which was lining up perfectly. I'd say we could come all the way back up to 36,000. Did not expect to get a close above it. So I'm sure a lot of people probably got bullish on this breakout out of this area right here. But the truth is, it's just another lower high. We have a high, we have a low, we have a lower high, we have another lower low, or same low even, and then, we have another lower high now. And, maybe we find support, march up here. If we take out this high, we can potentially start getting bullish again. If we take out the all-time high, we can definitely start getting bullish again. But as far as I'm concerned at this point in time, this is extremely bearish, especially once you find out that it was, basically just manipulation by, a billionaire that caused this to begin with. The least he could do is actually step in and buy some Bitcoin now and break this thing out to the upside and restart the bull run, since he basically just fizzled out any potential momentum that we had. So because this was actually looking good right here. This was like a nice little march up, come back down, find support. Potential to actually move up organically back to the top of the range, consolidate at it, and then break through. This basically like takes away all that positive momentum and potentially causes like negative momentum and damage. I do want to go to the longer time frame here, and I just want to remind everybody of this. This was our top back here from 2017, and look what we have. We had like a bunch of bullish candles going into it. We have basically like a powerful sell-off candle, couple big wicks on the bottom, an indecision candle, a nice green pump to a lower high, and then multiple just massive bearish candles in a row, and then a bear market. So look right here, a few nice green candles in a row, red sell-off, couple wicks to the bottom, potential pushback up to the top of the range, bullish action coming in, another lower high, and then potential just massive selling off. And now look, because of this candle is going to look even more bearish because we're not even going to be able to sustain this price action to the upside. So when, basically when futures closes today, this candle's, on the futures chart, it's probably going to look even worse than it would have looked if we had like that organic price action where we pump back up from like 28,000 to like 32, 33, 34, because we're not even going to be able to maintain that pump that we had like organically because of, this like tweet pump. So, in the end, what's it going to look like? We have all these green histograms in a row, and then one red one, and then a green one, and then a bunch of red ones in a row, all these green histograms in a row, one red one, potentially a green one, and then a bunch of red ones. We got the hard sell, leaving this area, the cross between the stochastics, hard sell, leaving this area, cross between the stochastics. Basically we're basically just asking for it at this point in time, as far as I'm concerned, to call this the absolute 100% top. Same exact thing here. we basically are able to sustain the 8 moving average, bounce off it, and then, get a massive bearish engulfing candle sell off. Last time he came down to the 50, 55. So, now that's going to target us back. Basically, the 50, 55, and 90 are all down at like 15,000. So, that's going to be the retest of this previous high right here. Do I think that we would find some kind of support along the way at the 21? For sure, 22,000, start filling these gaps up. But, it's going to look even more bearish as this price action continues if we don't basically pump all the way up. And even if we do at this point in time, it takes the confidence out of legitimate investors, takes the confidence out of legitimate traders. Technicals start to look fuzzy, like the whole thing. So Ethereum's the exact same way. Got a massive candle breakout, got the measure move of its descending pattern, and then next thing you know, sold off the entire thing straight back to where it started. The daily looks the same way too. It's going to look even worse now. This just looks like a massive rejection on the daily. We were basically organically crossing the 8 and 21 back to the upside. It was looking good, looking like potential bottoming pattern, looking like we were going to get the Stokes to cross right here and move to the upside. We start showing like green on the histogram, potentially move back up at least to retest the slope line. But now, what do we have? We basically have like a shooting star doji, developing. So again, we've got until the end of the day, 4 hours for this thing, a couple less for Wall Street for futures. But all we did was take out the parabolic SAR and then get a massive rejection, a massive shooting star candle. Price moves all the way up, gets rejected horribly back down, either ends with a small body like this, either green or red. Probably going to sell down below the 8 and 21, 33,000, probably going to close below that and then fail to get this cross back to the upside. And then it's just going to, a massive dump's just going to come in straight back down to like 29.5. But probably realistically going to break that support line and take us down to like 26,000, and eventually down to like 20,000 to retest the breakout. And, same targets we've been talking about, but now this looks extremely bearish on top of it. What happens if we move back up here and we find support? It's still going to look like a massive indecision rejection. Now we basically have to get a close above 39,200 to even start saying like this is a high. And then we got our low right here. And then we're at least coming back up to retest this. But again, it's just going to look like a micro. This will be our macro high. This would be our macro low. And then anything lower than this is just going to be a lower high. So even if we did come all the way back up, we could close as high as like 40,000 and then just sell back off. And it would still just be a confirmed downtrend. This was starting to look like, it was looking like Wyckoff distribution, potentially was looking like Wyckoff accumulation when you have like basically this downtrend right here, and then it's called the creek at the bottom here. You'll get like a bunch of like lower highs, and then you jump the creek, and then you find support, and then get continuation. That's what it was starting to actually look like, but then this Elon tweet comes in and basically manipulates the market, and you basically can lose all that steam because essentially like, the technicals just don't line up anymore, and all of a sudden it's just like some fundamental like BS pump. So we'll see what happens. I'm still trying to be optimistic on it, but I'm not happy with situations like this. I do not like manipulation. I don't like the idea of somebody like Chamath or Elon or Dave Portnoy trying to be some kind of hero, acting like they're doing good for the community, acting like they're some kind of Robin Hood, like stealing from the rich and giving to the poor. Like, I get that people don't like shorts against like what they like. But there's a reason typically people put in shorts, either to hedge a position, to take profits on a position without causing a taxable event. Like there's lots of good reasons, that people short stuff. So let's switch over to all the traditional markets, which are all looking like total crap right now. Just like we said, we basically fibbed out the tops potentially from everything. We came down now, this Dow Jones. We came down, hit the 236. Finding support temporarily, at least on the 50, 55 right here. But, 89 is our next target at 29,566. And then after that, the 382 at 29,165. We're getting now the cross between the 8 and the 21. We have multiple red histograms. We have red slope. We have the hard sell signal leaving the bullish control zone. Knife is powerfully stabbing down to the bottom, so potentially running out of steam. But, basically exactly what happened. We sold off, We tried to come back up and save price action, got rejected, which I told everybody right here when we found support on all these assets. We were going to come back up and try to get back above them. There's always like a reaction rally. Sometimes it comes to a new high, but in this case, another rejection. Looks absolutely terrible. NASDAQ, once again, extremely, extremely bad. Came all the way up here. Same fib levels we had in place already. Came up here, found support, basically had an indecision candle. Tried to push back up and save price action. Got essentially like a massive rejection, bearish engulfing candle. Actually gapped down today below the 21 and then got a massive sell-off on top of that. Almost hit the 382, almost hit the 55 exponential. We're trying to basically get a little bounce off of it now, but, we're going to end this week absolutely horribly. Could get a pushback up next week, try to save this price action. But this is an extremely violent move. Multiple histograms, getting ready to flip the slope line over red to the downside. Hard sell, leaving the bullish control zone. It's like the same exact chart at this point in time. S&P 500, basically the same thing. Sold back off. We did hit the 236 and the 50, 55 this time. Tried to pump back up like I said last time. Failed. We've got the, it's exact same chart. It's exact same thing. Some are slightly more bullish, some are slightly more bearish, but, they're all moving together in line now. And the strong assets are losing that strength now. And then here's Elon's little, crybaby right here. Pump and dump Tesla. Never have even gotten these moves to the upside if it wasn't for, basically short sellers. So for him to sit here and be all sad and salty with people and trying to act like Robin Hood, what's going to happen? We're probably going to end up coming down here and filling this gap. We gapped up here, came down, filled it, continued to move up, got some slight gaps right here, came down, filled that gap. We never filled this gap down here. So eventually we'll probably fill that gap at $408. So I would not put it past, the markets to come down eventually and fill that gap. I don't know when it's going to be. But basically, 236 is going to line up perfectly with the 50-55. That'll be our first target. That was also like this little, sell wall. 702 is the next target. Topped out at like 900. So that's a pretty big move down here. 382 after that would be 610. The 0.5, 537. The 382 lines up with the 89 also. 200 is going to creep up here. Potentially could find support at like $481 and come in line with like the 200 exponential. Or like I said, we close that gap, come down here more in like the 200 simple range. That key level of resistance. We also have that macro 236 is all the way down here at $485. That was for like this whole entire move up. If you fib from $68 to, $900, the 236 lines up with the 200 exponentials here. If we come down to that, we come down to the 618, exactly the same spot. I would expect a powerful move back to the upside and then continuation at least down to the 382. But, these are like market crash scenarios right here. 8 and 21, potentially getting ready to cross to the downside, potentially getting ready to close below that 21 moving average. Looks extremely bad. 38 minutes. Looks extremely bad. Probably why he decided to start manipulating markets. He's probably mad because people are short selling his little baby. And I can't even imagine how much, from $900 to $800, he basically lost like 15% of his net worth already. And he's probably getting ready to lose a lot more. So maybe the best thing to do would be actually buy some Bitcoin, with some of this money. Next, we have the Dxy Dollar Index. We talked about this one specifically. We're in this downward channel right here. We basically top out here. Hit this midline quite a few times. Can't get back to the top of the channel. Come down to the bottom. Come back to the midline. Find support. Come back to the top here. And then find support at the midline. And then this is typically how you break. You go from the top to the bottom to the top to the midline, and then you break out the top. But what we're paying attention to, exactly what we talked about, the rejection here at that 50-55 at that top, resistance line right there. But we now have crossed over. This has happened a couple times where we crossed back to 8 above the 21, crossed back to 8 above the 21, tried to sell back off, haven't quite been able to. We got these coiled up, basically like sold back down. The 8 is below, the blue is below the purple. But we could find support right here, break to the upside. It's going to correspond perfectly with, all these sell-offs in traditional markets. The dollar finally strengthening after like this long consolidation, like downward period. A lot of this had to do with stimulus and with the stimulus getting pushed back and, Biden not stepping up to the plate. Who knows if it's going to happen? Could we get rejected at the 89 right here and then sell back off? Could we get a fake breakout? For sure. But if we do break out, this is the measured move. Takes us up to like 96. And that is just like the distance from the top of the channel, bottom of the channel to the top of the channel. If we break out from our breakout point, it's basically going to take us up to like that range. So we'll have to see what happens. We did build up quite a bit of steam right here. We did the same thing here, but again, here in this area, we flipped over the slope line blue and all these histograms green, but we were coming from the bottom of the range, so we were able to get to the top of the range, and then we find support at the middle of the range, and even though we take out the low and sell down lower, we're finding support now at the middle of the range. So when we flip this back over blue right here, we're now coming back from the middle of the range, so we can have a lot more strength. As where we had to come from the bottom of the range to the top of the range here, we're coming from the middle of the range, and then a breakout, up to like that 200 would be like 93. So we have to see what happens with that. If we go to just a little bit longer of a time frame also, there's obviously a ton going on here. I was talking about this specifically. People are getting extremely bearish on the dollar because of the death cross. We got the 50 exponential below the 200 right here, the bright green below the bright blue. And then we also were like right about to cross the, 50, 50, that's 55 exponential, I'm sorry. There's a 50 simple and the 200 simple. A lot of times when you get that quote unquote death cross, especially on longer time frames, that's the absolute bottom of the markets. It's the absolute bottom of the markets. People get extremely bearish and then it's the absolute bottom. Now look here, we have a low, we have a clear lower low on price action, and then look, we have a low and a clear higher low on the indicator oscillator. That is weekly bullish divergence, which would imply a massive burst to the upside. Same thing here, we have a low, clearly lower, and then we have a higher low, clearly higher than this low right here. So we have a low and a higher low that correspond with a low and a lower low. Once again, clear bullish divergence inside of the bearish control zone, about to get the cross between the blue and purple, about to exit the bearish control zone if we get above 20, which we're currently at like 18.6. So also about to, basically, we've been testing consistently this 8 moving average on the weekly, which the more times you test support or resistance, the more likely you are to break it, and the less of a rejection you get, the more likely you are to break it. So when we come down to like say here, look at the 200 moving averages right here. First time we come to it, we get a big rejection and pump to the upside. Next time come to it, we get a small rejection and pump to the upside. Then we just kind of sit on it, then we break down from it, then we try to retest it, then we just go down. So this would line up perfectly with us basically coming up here, consolidating, breaking through it, coming back down, finding support, and then getting a massive, move to the upside, which once again would line up perfectly with us basically coming up from here, finding support, and then getting a pump to the upside. Next, we got the 10-year Treasury. Everybody was getting extremely bullish on this again. It's been in a long pump back up, since this is the daily, since basically like August. We basically been like slowly creeping back up from basically zero. It made it down to like 0.5%, 0.5. Slowly moved back up. Rejection off the 200, got above it, found support, started moving up, got rejected here at the 377, and then came back down. Looked like we were going to cross back down. Everybody's getting bearish again. All this monetary policy and everything coming in, and then look, bounce right back above it. 8.21 continuation, potential move back to the upside. Looks like to me a bullish reset, and then we're going to pump back up. So now here we are at 1.09. So basically like, starting to look bullish now on treasuries. So that corresponds once again, the dollar strengthening, treasury strengthening, yield basically is going to correspond with markets selling off. So a lot of times these are a prequel. You could say that one causes the other, but most of the time I like to attribute them more to correlation than causation. I don't like to say that this caused that. More likely that, when you look at the two things, they're going to move opposite each other or with each other, but one's not necessarily the cause of the other. So here we have gold right here. Same exact situation here. gold is in this downward, sloping pattern. It basically got that Bitcoin move, that Elon Musk fake out, pumped back up here, sells back down, loses support, and then gets a violent sell-off. We lose all this build that we've gotten up here, and then come back down to the halfway point, come back up, retest, and then, obviously everybody got extremely bullish on these assets, thinking it was going to break out, and then what did we really get? We get a shooting star, multiple, like, doji rejections in a row. You got this big wick and no body left. That was us trying to get back above the 200 simple. We bounced the 200 exponential, 200 simple, got a high, but it's a lower high, come back down, bounce them again, and get almost no pump action off of it, come back down one more time. So what's the next target? 1821 basically, potentially breakthrough, and continuation to the downside. Once again, to me, this chart looks extremely bearish. That's not what you want to see. You want to see it break out and get that measure move back up, at least to a lower high, and then try to find some kind of support and continuation. But this breakout right here, and then just dumping straight back through it, looks exactly like Bitcoin does. So we could attempt to come back up here and break out again, but more likely than not, what happens in these situations is you dump back down first to the midline, which is going to put us down at this key support level from before, about like 1770, and then, more often than not, we'll be right back down at like the 377 bottom of the range, or the 528s creeping up here, bottom of the range. So, somewhere around like high 1600s to low 1700s is my target for gold here. It's also the breakdown of like this triangle pattern that we've been developing here. The break up would take us to over 2000 again. The breakdown, which we tried to break out to the upside and failed, the breakdown is going to take us down to 1700. So, once again, failed breakout results typically in a dump in the opposite direction. Because if the market's always just trying to go the path of least resistance. True traders and speculators or whatever, it's easier to make money to the upside, but most of the time they go the path of least resistance. They're not going to try to swim uphill, and if they do, they'll try for a little bit, and if it's not working, they just say, F it, I'll just jump on an inner tube and float down the stream. Go with the flow. And then when the time is right, then they'll push price back up to the upside. But, they're not going to fight upstream forever and just tire themselves out. Money costs more when you have to take out leverage, or you have to, pay higher fees or rates, because essentially like everybody is on one side of a trade, and it's a lot easier to move the price action in the opposite direction, go against the stream, take everybody else out of their positions, and then get the burst to the upside afterwards. So, that's what it looks like to me right now. Everybody's on one side of these trades. Typically goes in the opposite direction. Silver, once again, is looking like slightly more bullish. We had our high here, we had our low, and then we had a lower high. We had that same low. This now becomes the macro lower high. So we have a high, then we have this low throughout this area, then we have a lower high. We tried to break out of the pattern right here. Looked potentially like we were breaking out of the pattern right here. But essentially all we really did was we did exactly like what Bitcoin did. This is our, initial triangle. We break out of the initial triangle, but what did we really do? That was just our high right here, and then we had that wick right there, and then we had that wick right there. We break up, then we have like these closes right here. So now we have another multiple touch point. I prefer to use closes, but I like to always put them in place to see what's going on, see what's potentially happening. That's essentially just that close right there, and then we come back down to like the midline area, find support, get this inverted head and shoulders, looks potentially bullish, but we just got rejected at a lower high now. So in an hour and 28 minutes, if we don't at least take out 2750, which would be a breakout of the top of this range and close, it's going to look bearish again, because it's just going to look like another lower rejection, and then we're probably going to come back down to the bottom of the range and start looking exactly like Bitcoin again, which makes sense, because these things tend to like move together, just because they're both like quote unquote store of values, or essentially like commodities. Although Bitcoin's more speculative, this is actually like industrial uses and whatnot, but still they move together most of the time. So I think $22 is looking more and more likely, with this failed breakout basically. And then again, we have the measure move. If we break out of the bottom, it's going to take us down to like 1660. I don't think it's likely, to get a move that far down, but that's the 618 of this move. from the paper trading like 1160 up to like the top here at like $30. Overall, again, I'm bullish on silver and everything, but if we get another massive stock market dump, like remember what happened in March with gold and silver, they sold off horribly too because their liquidity, like people have to grab like liquidity where they can. They have to pay like, get money to, stop margin calls. Margie's on the phone and she's dialing you up. Like you better put some money in your account or, you're about to get liquidated positions. So a lot of times like, people sell gold and silver and, things like crypto because it's quick, easy, and, then they, can basically like support their margin on their stocks or whatever too. So we'll see what happens. This looks to me like, we're getting basically a rejection, just like we talked about, come back up, potential rejection right here. Got the cross to the upside. Typically when you see the cross, you get like an aggressive burst to the upside. We got that aggressive burst, but now what's it going to do? It's just going to put in a lower high and then sell back off. Again, back down to this level. Could we basically put in this high, multiple sets of lows, jump over the creek, come back up, put in a lower high, come back down, put in a lower high, and then come back down, find support here, retest the breakout, retest the bottom of the range, and then come up to the top, back to like that $27 and break out to the upside? Yes, it's completely possible and, fairly likely. But typically, you don't want to see that happen. You want to see the retest, come back up, break through, and then a retest of that break, and then a move up. Continuation. So that's what we're paying attention to. Sorry about the video earlier, guys. The sound issues, that really sucks. That was an excellent video, but hopefully this makes up for it. I do appreciate all the support. The comments were absolutely hilarious. People were like, some of them had me just absolutely like rolling. This move is so crazy. Words can't describe it or something like that. There was a couple of really funny ones in there, guys. I do appreciate all the support lately too. And one thing I've noticed is, man, like, typically people get like maybe 10% of the viewers will like give a video a like. And the last couple of videos I've had like, it'll be like 200 views and 25 likes. That's epic, man. For you guys to take the time to just like actually click that like button, really means a lot to me because I do see that, and it drives me to make more of these videos. I don't make any money off this. A lot of times I actually like lose out on a good trade because I'm doing this instead of paying attention to markets. Could be making a nice scalp or something like that. But I appreciate sharing my insights. I appreciate the community, building this channel up, and eventually just like building other great traders, helping people out, helping people learn, hopefully people getting rich right alongside. But that's it for today, guys. I do appreciate all the love, likes, supports, all that stuff. Hopefully you made some money on the pump today, took profits. Maybe make some money on the next move if you missed this one. But as long as you're learning along the way, there's always going to be moves like this. People are always afraid they missed a big move, but there's always big moves. There's always going to be another GameStop, another Bitcoin, another Tesla. There's always another one. But just remember, you have a unlimited amount of risk when you short something, but, limited amount of gains. You can always make more to the upside on something when it has good technicals, good fundamentals, etc. But, remember, go with the flow, trade with the trend, all that good stuff that I'm always regurgitating all the time. Don't get into these pump and dumps and everything and these Twitter groups and all that stuff. I mean, because like they say, easy come, easy go. I was talking about Dogecoin also in the video yesterday, and I knew it was just a bunch of no good stuff. Elon has done this in the past with Dogecoin, where he just all of a sudden tweets out Doge, and then it goes on one of these parabolic uptrends. And if you've never paid attention to what Dogecoin's chart looks like, it's literally like sitting at like, like a tenth of a penny for months and months and months doing nothing. It's like completely dead, and then all of a sudden it'll go parabolic to like 5 cents. It'll like 50x, and then it will sell back down, exactly back down to like a tenth of a penny. Yesterday it went up to like, it was like 9 cents or 8 cents, almost 10 cents. I did a couple scalps on it along the way, but I think today it was back down at like 4 cents or something like that. So if you bought anywhere up near 8 cents or 10 cents or whatever, you lost half your money. And a lot of times what happens is people will put a little in, people put a little in, people put a little in, and they're Xing, making gains. And then they start getting greedy near the top. And then, I'm doubling down. And they double down and then lose 50%. And then when it's all said and done, all the gains they made plus now they have losses. so they're actually in a worse position, and then they don't want to sell at a loss, so then they end up riding this thing right back down, and then they end up in a massive loss, and then that's how you end up with a chart that's like literally just like a dead heartbeat, like lower highs, lower highs, lower highs. And Dogecoin can't really go any lower than like a tenth of a penny. I mean, it can, but at some point in time you got to just figure that's just like a base that it's probably not going to break anytime soon. So I'm not saying it'll go back down there, but just be careful with these pump and dumps. And Elon is known for this type of stuff, which really pisses me off. I don't wish bad on anyone, but I really wish these dudes would just like stop trying to be heroes or exploiting their fan base or following or whatever. Because again, this is bad for Tesla. It's bad for crypto, especially Bitcoin. It's bad for a lot of these other assets as like silver and gold try to move along with them as well. A lot of times this stuff puts additional downward pressure on assets and, can completely screw companies. Like obviously gold and silver and Bitcoin aren't companies, so nobody has to worry about losing their job. So it's not as serious or whatever. But, a lot of these companies have like real employees and real owners and people's pensions tied up with them and stuff like that. And, if you pump and dump somebody's real company or whatever, and then it never recovers, like you basically like crush someone's dream, crush their family, took everything they've ever worked for, just with like basically like a little pump and dump. So, morality wise, it sucks, man. Like, I'm in these markets to make money and everything, but at the end of the day, you got to remember what really matters to you is, do you want to be rich and have no soul, or do you want to be like well off and educated, but, have like your morals, like be a good person, like a decent human being? Because like to me, that's much more important. I would rather just be comfortable and live comfortably and, be able to like look at myself in the mirror and know how to use TA myself and know what to do, rather than following somebody on a tweet storm or a Reddit group, and knowing that you're potentially crushing someone else's dream, or that you're basically like you're stealing the life force of someone else with this type of stuff. And again, I'm not defending like these Wall Street guys and these hedge funds and everything. What they're doing is super shady. They're basically like collaborating, telling you like sell, this thing's going to zero. Meanwhile, they're buying it behind the scenes, or they're telling you, shorting more stocks than there is possible, whatever. But let's be real, like in all reality, like GameStop probably is a dead company. Like Blockbuster definitely is a dead company. Like airlines definitely are like screwed right now. I think like, I can't remember which one it was, like American Airlines pumped like 25% with one of these things. And, this, I think they said they were losing like $1 billion, $3 billion a day or something like that. No, it can't be right. $3 million a day? Yeah, I think it was $3 million a day. They were bleeding. So they said in 1 month, that's $90 million, $100 million. Man, it might have been, I can't even remember. These numbers are so ridiculous, it doesn't even make sense anymore. But, essentially, even if you are losing 100 million, I feel like it was maybe $1 billion. But, there's a reason these companies are going down. They shouldn't be pumping to the upside. That's how you know that we're in like a massive speculative bubble on like pretty much all these assets. And it really is time to remember, more importantly than anything, like protect your capital. It's so much easier to lose money than it is to make it. You can work your whole life, to acquire a little bit of fortune, and you can lose it all in a minute. Just getting caught up in these little pump and dump schemes or FOMO, emotions, whatever. So just be very careful. Crypto trend trader, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Crypto trend trader, and I'm out of here.